Hello traders, my name is Tomasz Wiśniewski, and I'm a chief analyst in Alpari Research and Analysis, and this is daily analytical report. Let's start because we have a few very interesting movements on the market. Most of the movements happened yesterday, especially on the American dollar. We are still digesting the results from the elections. But also traders are positioning themselves ahead of the FOMC statement. So overnight, yes, we do have a decision, but the decision, we are expecting the rates to remain the same, but statement will be the most important thing, because from the statement we will be able to estimate if we will get a rise in December. So all eyes on the statement. What else is happening? We got information from China, data from China, trade balance, exports, imports, all that came better than expectations. Still to come, we will have two important members of the ECB with Mario Draghi on top, speaking in 6 hours, and that will be it. On Friday, important data for the China, so for the Australian dollar, also the statement from the Reserve Bank of Australia. So overnight we should expect a bigger volatility on the Australian dollar due to the statement, but also due to the inflation data from China. Also, we have GDP from UK, and that will be it. We have some data from United States, but it's not tier 1 data, so we should not expect any major movements. With that being said, let's look on the charts, and we start with the dollar index. This is the movement from yesterday. So yesterday, dollar index was very bearish at the first half of the day, at the very beginning, right? What the price did is the price created a head and shoulder pattern, left shoulder, head, and right shoulder. We broke the neckline of this formation here. But the drop has stopped on the long-term, mid-term. It connects the higher lows since the end of September. So you decide if it's long-term or mid-term. And the price went to this line and bounced from it. So this is a false breakout pattern, false breakout from this lower line of the from the neckline, really, and then the price goes higher. Why I said the lower line at the very beginning? Because it's the lower line of the wedge. So if we don't have a head and shoulder pattern, we will get a wedge. A wedge in this case is created after an upswing, so upswing, correction, upswing, correction, we should get an upswing. Today the price tried to break the resistance once, unsuccessful. The first attempt was unsuccessful. Maybe we will get a continuation of this. The buy signal will be triggered when the price will close the day on the or very close to daily highs. This, in my opinion, this what should happen here. Chances for that are quite high. I would say that the buy signal on dollar index is more probable than the sell one. I'm sorry, we are back. American dollar to Swiss franc is the second instrument. So as always, I start with the instruments that I mentioned on the Trading Sniper video. And here the situation here at the end of the month, at the beginning of November, was more bearish. Why? Because the price was creating a false breakout above the horizontal resistance. In addition to that, the price created a head and shoulder pattern. So yesterday we got a legitimate sell signal. Like this false breakout, this pattern, this breakout of those supports, that was legitimate sell signal. But again, it was false. So this was a false breakout. Well, sometimes it's happening like that. You cannot do nothing with that. You just need to make sure that the loss from the false breakout is not too big. But false breakouts, they do happen from time to time. But false breakouts can be also opportunities, right? So according to the technical analysis, false breakout is the invitation to go to the other side. So what do we have here is comeback. We have upper line of the triangle, lower line of the triangle. We try to break the lower line here. Most probably, if the price did not manage to break the lower line, the price will try to break the upper line. So this is my scenario for the American dollar to Swiss franc. And now S&P 500. S&P 500 also made a very quite nice reversal. Yes, beautiful. We can call this reversal beautiful. So this drop was more or less the same as this one. So I would love to see the history repeating itself. So you may think that this reversal is the end of the downswing, it's sustainable and we should see a further upswing. Okay, fair enough. You have some grounds to think that. For example, the left shoulder, then the head, then the right shoulder of the inverse head and shoulder pattern. And then yesterday the price broke the neckline of this formation here and is going higher. So what is happening here is the price is testing 61.8 and this horizontal resistance. But with the breakout of the neckline and the comeback above the green line, here we should see the further upswing. But look, back then we also had a significant reversal above 61.8, but still the price managed to go lower in March. So if history will repeat itself, we will get another leg down soon. But that's based just only on the fact that history likes to repeat itself. If you do not believe in that, do not worry. You have reasons to not believe in that. Don't take that for granted. On the hourly chart and on H4 chart, you have a legitimate buy signal, which is triggered by the inverse head and shoulder formation, breakout of the neckline, comeback above the major uptrend line. That's pretty much it about the instruments from the trading sniper video. So let's analyze the rest. Oil made new lower lows again yesterday, lower highs. Today we are going for the lower high again, but it seems like they are getting ready for a bigger correction. This recent drop is so strong that I really would not be surprised if we see kind of a reversal. But as long as we stay below the green line, the sentiment is still negative. And this is our outlook on this instrument. So, sell signal on the oil. Now euro to New Zealand dollar. What is happening here on euro to New Zealand dollar is our scenario is in play, right? We said sell when the price will break the blue line. Boom. Unfortunately, now if you want to enter here, that's not the best idea on the record because we are exactly in the middle between the stop loss and take profit. So if you plan to open short position here, it's not recommended. Yes, the price should eventually get there, but it's all about the risk to reward ratio. That's a factor that you should never forget about. Risk to reward ratio. So open only trades where you have huge potential win and small potential loss. When would be a good time to open a short position after a reversal touching the red line and the green line? Then opening short position would be interesting. Euro dollar. Euro dollar was having a real roller coaster recently, so inverse gonna show the formation breakout of the downtrend line, breakout of the horizontal resistance, test as a support, upswing, pullback, and now it seems that we are back in a negative territory again. Why? Because we are below this horizontal resistance. The fact that the price is above the red line, if that cheers you up, I don't think it should, because it does not look like a strong support and a significant sign. I would be more concerned about this red line. Okay, we are still above the red line, but the red line is the lower line of the flag. Downswing flag, downswing, most probably a downswing. But if you are, we have a combination of two important supports here. So this downtrend line, this lower line of the flag. So the price closing a day below the orange line will be a strong sell signal. Australian dollar to New Zealand dollar, nice drop, continuation. That is still a negative sign, that is still a sell signal. In the long term, in the short term, the bullish reversal seems more and more probable at the moment. Look at this drop. We are really trying to make a local bottom here. We will see where this will stop, but I wouldn't be surprised if the price went here to the combination of the horizontal resistance and dynamic downtrend line. So this looks like a good occasion for a bounce. And actually, to be honest with you, I would love to enter with a short position there. Obviously, only after I would see a bearish setup in that place. Australian dollar to Swiss franc, that's not what was expected, but the price created a shooting star here on the horizontal resistance, but then did not reverse. So there was a rising pressure on this resistance, and very often it shows us a willingness for the breakout. And this happened, so we do have a nice upswing in terms of the risk to reward ratio. It is still a good position because you can open here, stop loss here, and you can aim much higher. Yes, I go with trends, so I should like the setup, but I don't like to open long position at the top of the uptrend or short position at the bottom of the downtrend. And now we are just few pips from the midterm highs, so for me this is not the place to open a position. I don't think it's a good place to open a long position. I always want to wait for the breakout, for the bigger correction first. Australian dollar to American dollar. We will see where this strength of the American dollar will lead us. But as you can see, Australian dollar is pretty strong too. What I was expecting this upswing. This upswing happened, and now I'm expecting a drop from this line. And as you can see, we have kind of a double top formation, which can lead us to this correction. Obviously, we will be under the influence of the FOMC. We will see where that will lead us. Swiss franc to Japanese yen. Still waiting in the longer term. We don't have any good trading signal. Most probably we will go lower, and this is actually this correction can be a good occasion to enter with a short position. 23.6 was important, 38.2 will be important too, also from the historical point of view, not only from the fact that it's 38.2, but look, resistance, support, resistance, So we need to wait. Maybe a bearish price action here will be a good occasion to go short. Euro to Australian dollar, this is beautiful. So you can see the strength of the Australian dollar, but at the same time you can see the descending triangle pattern. So a horizontal support dynamic downtrend line. And this is happening under the long-term uptrend line. Here the sell signal is on. The sell signal on Euro to Australian dollar is definitely on. Euro to Swiss franc, the price stopped. Third day in the sideways trend. As you can see, intraday movements are pretty volatile. Up, down for the daily, from the daily highs to the daily lows, back and forth, back and forth. We're waiting for the situation to develop. This is the end of the right shoulder as well. Left shoulder ahead, beginning of the right shoulder, end of the right shoulder. But this will be the right shoulder only when the price will get to the checkpoint. Before that, you cannot think about the short position, long position. What also I see here is a drop, correction, drop, correction, drop, correction, drop. Well, seems like so. British pound to New Zealand dollar, we were expecting a drop and this is what is happening, but now the price is protecting, is defending on the long-term uptrend line, which connects higher lows since September 2017. So there should be no surprise that we do see a bounce here, and this bounce is with a double bottom formation. Okay, fair enough. But that also gives you a nice occasion to sell. So the price closing a day below this line is a great occasion to go short. As for now, we can see a small bullish correction, but at the end of the day, I mean, sooner than later, it's almost certain we should get a breakout of this line, and a breakout of this line will give us a proper sell signal. New Zealand dollar to Canadian dollar, what is happening here is the breakout of the downtrend line, and we are in line with this inverse and shoulder formation. So that was a beautiful pattern. The price went significantly higher last week. This week this upswing is pretty strong. What we broke is this downtrend line. We are stopping on the combination of those two Fibos, maybe a correction, but we should see a further upswing soon. And dollar index, you remember, so here we are. Since I talked about this instrument 19 minutes ago, you can see that the situation changed a little bit. So we do have a pullback now from the daily lows. We are trying to attack daily highs. So the same should be happening on the American dollar to Swiss franc. From the daily lows, we are attacking daily highs. So this scenario that we are talking about 19 minutes ago is happening right now as we speak. Obviously, for the signals, you need to wait for those places that I mentioned before. So breakout of the upper green line, and here breakout of the upper green line too. On gold, well, stronger dollar is not helping gold. We bounced from the 38.2 again, which is pretty negative situation. And we are aiming 23.6, which can be a good occasion to open a long position. But the thing is that traders may feel a little bit disappointed with the lack of the breakout here. 38.2 proved to be a proper resistance, and well, it seems like now it's a bearish time, at least till the lower blue line or the lower red line. Once the lower red line will be broken, the bearish time can be with us for a bit longer. We will see where it will go. Bitcoin, a nice upswing yesterday, and now we are canceling this upswing. We are still inside of the sideways trend, so nothing happens. We are in the middle between exactly the top of this range and the bottom of this range. We are more or less in the middle. Now the test of the support is more probable. Yesterday the test of the resistance was more probable. But to be more clear about the future direction of the Bitcoin, we need to see the breakout either to the upside or to the downside. Now we are having a DAX, which is fighting for this inverse head and shoulder pattern. Fighting. We will see if they will manage to break the neckline. Most probably yes, and we will aim for this neckline. This neckline is most important because it's a neckline of the long-term head and shoulder pattern. But as long as we stay below the green line and the blue line, the sentiment is still negative. And Nikkei had this false breakout pattern, and now we are having a reversal, and this is the important resistance here. And obviously with this kind of a reversal, we need to check the Fibos. 38.2, fair enough, 38.2 worked. But this will be more or less 61.8. So this area will be important for the Nikkei. Okay, and bearish price action here, that will be a sell signal. Okay, guys, let's do a quick recap of the situation on the charts. Let's start with oil. Oil is a sell signal as long as we stay below the red line and the green line. Euro to New Zealand dollar, that's a sell, but trading wise not the best occasion because of the bad risk to reward ratio. Euro dollar, well, breakout of the orange line, that will be sell. Australian dollar, New Zealand dollar, short term buy, long term sell. Australian dollar here with Swiss franc, this is buy. Australian dollar to American dollar, unknown. Swiss franc, Japanese yen, that's rather long term sell. Euro to Australian dollar, long term sell. Euro Swiss franc, breakout of those supports will bring us a sell signal. And British pound to New Zealand dollar, long term sell, possibly short term, mid term buy. New Zealand dollar to Canadian dollar, that is buy. Dollar index, that is buy soon. American dollar, Swiss franc, soon probably buy. S&P 500, that's difficult because I love history and I would be too afraid with opening long position here. Because the chances for a further slide are quite significant. Gold, most probably a drop. Bitcoin waiting, but a drop. DAX upswing and Nikkei upswing. And in case of DAX and Nikkei, I'm talking about the short-term, mid-term. Okay, traders, thanks very much for attending this daily analytical report. I hope you enjoyed that. Make sure to visit us on our Twitter account and our Facebook and our YouTube channel and our website, obviously, Twitter, yes, I mentioned. Thanks very much, guys, and good luck with trading.